This week at the zoo, the S&P 500's uptrend stalled at the 200-day moving average and turned into a dive, ending the week down over 2%. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we reflect on last week's news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. And on Monday, the S&P 500 dipped a bit on the open due to a spike in new coronavirus cases and pessimistic employment forecasts over the weekend. But we ended the day with a small gain on optimism around reopening the economy. Shanghai Disneyland sold out on opening day. Amazon was in talks to buy out AMC theaters. And Carnival Cruise Line saw bookings surge to 600% of pre-pandemic levels. So it looked like consumer demand might come roaring back. Tesla, surprisingly, had a pretty good day despite data showing their China sales fell 64% in April. And also on Monday, Bitcoin dropped to the $8,000 range before the infamous halving, and then it rallied the rest of the week.
Tuesday, the S&P 500 opened green, but then it fell sharply to end the day down 2%. Traders were reacting to announcements from Los Angeles County and from the United Kingdom that they plan to extend lockdowns for several more months. So it sounds like the coronavirus quarantine is going to continue longer than some people expected. Tesla sold off on Tuesday on news that the launch of its 2020 Roadster will be delayed until 2022, so it's no longer the 2020 Roadster. And airline stocks sold off after the CEO of Boeing hinted that a major airline will go bankrupt this year. Oil prices were one bright spot on Tuesday as Russia announced another big oil production cut.
And on Wednesday, the market sold off another 1.8%, mainly on news of rising tensions with China. U.S. warships are facing off with the Chinese Navy in the South China Sea, and Trump is threatening to sue China or to impose new tariffs on China as punishment for its failure to contain the outbreak of COVID-19. Employment forecasts also worsened on Wednesday, with Goldman Sachs predicting unemployment will peak at 25% rather than 15%. And Starbucks sold off after the company told landlords that it needs a 1-year reduction in rent. And cruise line stocks fell on news that Royal Caribbean had to borrow billions of dollars at an interest rate near 12%. That's worse than my student loans. Oil prices once again rallied despite the broader market sell-off as EIA inventory data showed a surprise reduction in oil inventories this week.
Yeah, you can imagine that if even if demand comes roaring back for cruise lines, all of the profits that Royal Caribbean might make for the next few years are going to go right to paying the interest on those loans. So don't expect any big profits from cruise lines or any quick recovery from cruise lines in the next few years. Carnival also has borrowed money at a similar interest rate. On Thursday and Friday, the market rallied almost 2%, despite an escalation of the hostile rhetoric between China and Donald Trump. Trump announced that the U.S. will be imposing more restrictions on the Chinese company Huawei, and China retaliated by canceling all of its orders for new airplanes from Boeing for the rest of the year, and it's also talking about investigating several major U.S. companies, including Qualcomm and Apple. Jobs numbers came in roughly in line with analyst estimates on Thursday at about 3 million new jobless claims. Chinese factory output came in much better than expected on Thursday, although consumer demand and investment demand don't seem to be keeping pace with the output spike, so it's possible that this could lead to rising inventories as a result of there not being any demand for all of that product that they're putting out. And on Friday, the US's industrial output and retail sales numbers came in much worse than expected. The rally on Friday may have been driven partly by overhyped rumors that Sorrento Therapeutics has discovered a cure for COVID 19. Actually, what they've discovered is an antibody that blocks COVID 19 in a test tube, and it's quite a ways from any kind of clinical application, although certainly it's a promising development. Partly, the rally may also have been driven by congressional Democrats' $3 trillion stimulus bill, which passed the House of Representatives by the end of the day. But again, don't expect this to turn into anything. The bill probably won't pass the Senate because Senate Republicans said over the weekend that the bill is dead on arrival in the Senate, and Trump said that he would not sign the bill. Let's talk stocks that we watched last week. Robert, what were you watching last week?
So I was watching Bitcoin. So as we mentioned, the halving occurred on Monday afternoon. Bitcoin prices fell before 9,000 last weekend on Sunday. Before recovering through the second half of this week, prices are still volatile as the previous halvings didn't see prices skyrocket until about the 12 to 15 month following the event. So it's about a year before we're going to see any real movement in terms of the previous like skyrocketing prices. But I anticipate those buying the hype will sell off, and we will probably see a couple more dips into the 7,000, maybe 6,000 territory in the coming months. But I see those as buying opportunities for a very high risk, high reward situation. Again, I caution anyone looking to invest money in Bitcoin to understand that Bitcoin has a lot higher risk than traditional stock investing.
I saw over the weekend here that one of the Latin American companies has signed a deal with a crypto company to accept Bitcoin at quite a few stores. I can't recall if it was Venezuela or Brazil, but something to look into if you're into Bitcoin trading. That might increase the demand for this product. I didn't watch anything last week. I was 100% cash. I did mention that I was watching whether the S&P 500 would get above the 200-day exponential moving average, which it did not. It touched that moving average, and that was almost the exact top. It then plummeted from there. So that just goes to show you how powerful these technical indicators are. And if you had shorted the market right there, which I did not do, you would have picked almost the exact top of the market right there. So really useful level to watch. That 200-day exponential moving average has repeatedly been a really, really critical level to watch, a major reversal level for this market. Let's talk stocks we're watching this coming week. Robert, what are you watching?
So this week I'm watching Best Buy, Walmart, Target, and Take Two Interactive. Now, all these companies are reporting quarterly earnings this coming week, with Best Buy should be interesting as it could be a coin flip in terms of good or bad. Obviously, they have no foot traffic, which means no in-store sales, but you don't forget that Best Buy does have an online storefront. And with many working from home, I expect their online storefront to have record sales in their computer and home office departments. And then Target and Walmart should also see record sales from their online sales on top of people hoarding non-perishable goods and household cleaning products. But they will probably lower their forecast for the rest of the year if they don't see the country reopening as a good sign. And then finally, Take-Two Interactive is another video game industry stock. Now, most other video game stocks saw big gains, such as Activision Blizzard, Tencent, and Zynga. However, I don't think Take-Two is going to see the same, as they haven't released a major title during this pandemic, and their release of WWE 2K20 was marred with so many bugs that they opted to not even release a 2K21 game. I expect them to miss expectations and this may represent a buying opportunity after it bottoms out, as there are rumors of another Grand Theft Auto game being developed, which would boost the stock when it's announced.
Yeah, so this week I am watching oil, especially on Monday and Tuesday. I think that there are a lot of traders who are short on oil ahead of the futures contract expiration date on May 19th, because last month the futures contract expiration date triggered, oil prices going negative the day before. And so I think that a number of short sellers are expecting that to happen again. There were a lot of analysts who predicted weeks ago that that might happen again in this month in May. But I actually don't think that's going to happen. When I've been watching oil prices in the last couple weeks, it looks to me like there's a short squeeze happening. So those a short squeeze is when those short sellers have to close out their positions, and there aren't enough buyers of those positions for them to get out fast enough. So it can lead to a big spike in prices. So I actually think that we could see prices shoot up in the next couple days as the short sellers get forced out of their positions. We have also the number of June futures contracts was limited by the exchanges, so there's a bit of a supply constraint in the futures market right now. Gasoline demand has been much stronger than expected because people are driving rather than using mass transit. So surprisingly strong consumer gasoline demand. And also the supply of storage is not quite as bad as it was being advertised to be a month or two ago. So on the whole, I think that the drivers for the oil market are, at least in the very short term, pretty strong. I do think that we could see a sell off on Wednesday. So I would want to exit that position. I bought a couple calls in ExxonMobil, which probably was not the best company to buy because there's some unrest in, I believe it was Mozambique over the weekend, where ExxonMobil has some projects. But maybe Chevron, some of the other oil companies might see a spike if oil prices spike on Monday and Tuesday. But then I would want to exit those positions on Tuesday before the Wednesday inventory reports come out. So that's one thing that I'm playing this week. I'm also watching silver pretty closely. Silver has been at a record low relative to gold, but it looks like it's starting to break out. And I think that we might see a big run up in silver even as gold comes down a little bit. When you look at the big hedge funds, they're net short on gold, but they're net long on silver. So a lot of metals traders are looking at silver and seeing this as potentially the beginning of a big mega trend in silver. And finally, I am watching Baidu's earnings this week. I expect Baidu to post a pretty significant earnings beat. However, with the risk of another round of China trade war, I wouldn't be surprised to see this go up on an earnings beat and then come right back down again because investors are afraid of a trade fallout between the US and China. The valuations on big China tech stocks right now are much better than US stock valuations. So these are like pretty good buys. They're very affordable stocks at this level. But I am really worried about trade war risk. And I think that these could take a huge hit on any news of like major trade fallout between the US and China. But the reasons to expect a Baidu beat are pretty strong. Baidu has a strong history of earnings beats. It's been monetizing a lot of new AI patents, and I don't think that the analysts have fully priced in the AI monetization that Baidu is doing. And also, Baidu has been getting earnings estimate revisions upward in the last few weeks, and the analysts who are like have the best track record are much above the consensus estimate for Wall Street. So, lots of reasons to expect an earnings beat in Baidu. So, I do think that at least as a like a day trade, this is maybe a pretty good buy ahead of earnings. All right, folks, if you have heard anything on the podcast that you found useful, please give us a like, share, or comment on YouTube. It's your likes and shares that help us circulate this podcast. We don't pay for any marketing, so it's all word of mouth, and we really appreciate your support. Please also consider clicking the referral link to Webull underneath the YouTube video and signing up for Webull, depositing $100 in your account. If you do that, then we get a free stock and you also get some free stocks, and that'll help us support the podcast. And Webull is also holding another deposit promotion right now where if you deposit $25,000, you get quite a few free stocks. And that scales up. So if you even go as high as like $100,000, I think you get 100 free stocks or something like that. So not a bad deal if you want to deposit a bunch of money and start really aggressively trading during this downturn. It's a great time to do it. And with that said, folks, we will see you back at the zoo next week. Thanks so much for listening.
See